All right. As always, wonderful and beautiful, glorious day it is. Ladies and gentlemen, this is the day that the Lord has made. Let us all rejoice and be glad in it. It is a super, super Saturday. Absolutely, it is. It is October 5th, 2024. All right, this is your weekly trade watch list. Okay, weekly trade watches on the horizon. So that means we're about to go over some pairs, some trade setups that we took, why we took them, and what we're looking for into the next upcoming week. All right, October 6th through October 12th, weekly trade watch list. All right, so everything you see here on my screen from this point on, I've taken all these trades, and there's some other ones that are not. There's some other ones that don't even appear on this trading view screen that I've taken. All right. So I like to keep it a buck, keep it a thou wow, keep it 100, be honest and transparent. So I'm intentionally, because people believe that um, you need big money in order to make it in forex trading. No, you need a you need discipline, you need emotional intelligence, you need discipline, you need a extreme level of patience, and you need to understand um, the market price cycle. You understand the market price cycle and liquidity. Uh, these are the quintessential things you need to understand in order to make it in forex trading. So I'm intentionally starting with a $143.44 account. So to be able to not prove it to people because they don't care what other people think, but to show you that you can make it in forex with a small account. Everybody in this world, not everybody, but some people, we got more people than not that can sacrifice 143, $150 to put into their trading account to be able to trade it. Okay, so everybody doesn't have the ability or the means of finances to start with a $1,000 account, 2K, 3K, 4K, 5K, or even 10K account. So that's where you have prop firms that come into place because the prop firms say, hey, you know what? Traders normally lack capital. So we're going to solve that and then just have people pass two phases and then we'll give them access to the live funded account. Okay. So these are trades we took. I'm not going to go into detail and explain each and every last one of them because there's so many trades. Just wanted you to be able to see as how many trades we took. Right here was three trades. You see this yellow. It was on the M1 time frame where we took these trades at, and obviously it's simply, this was our take profit. Okay, we had a 1 to 6 right here. We had a 1 to 7 right here. We had another 1 to 7 right here. All right. Made sense. You got to understand what the higher time frame needs to print in order to be able to trade the lower time frame. You can't just go zoom straight in the lower time frame without understanding what the higher time frame needs to print out as far as the the market price cycle. When you understand how a market prints, I'm telling you, it's a whole game changer. When you understand what liquidity is, it's a whole game changer. When you understand the three areas where the bulls can show up and three areas where the bears can show up, you'll be able to be more patient. And the thing about it is this: you never ever miss a trade. You never ever miss a trade. Stop looking at what the market did and what the market has done, and start beginning to look at what the market is doing and where it's currently at. Is it in a selling position? Is it in a buying position based off the time frame you're looking at? Okay. Remember, you never ever miss a trade. So don't think psychologically, oh, I missed the sale. No, here's the deal. You didn't miss the sale. You're preparing yourself for the buy. Oh, I missed the buy. No, you didn't miss the buy. You're preparing yourself for the sale. See that differences of psychology. When you swap that level of psychology, you you make yourself realize you don't ever miss a trade. You don't miss a trade. So took some sniper entries right here on gold. I believe this was Wednesday. Yeah, excuse me. It was Wednesday because I was on shift, and actually get an execution right here with this stop loss, and actually did an execution right here on the M1 time frame with this stop loss. And ego got the best of me, and I was attempting to route it up here to the 26, 66, 47 area because I wanted it to go there, and just completely ignoring the supplies on it, said the bears are not going to come in there, and obviously they did. And obviously you got this bearish divergence and change of character, and price sold off, and the remaining volume hit break even. I simply got in for these sales on gold right here, based off the M1 time frame. Got in this sale, and I got in this sale right here, and both of them hit TP. Which right here is 1 to 8, and there's a 1 to 7. And obviously, if I had not put these in my TP, the price would have came back up, took the remaining volume probably out at break even, and then it did the complete meltdown. Right here was news. This was NFP. No, this wasn't NFP. That wasn't NFP. But this was news, though. This was news on Thursday. I was in profit right here. I simply got distracted and, went away from my phone. And then, boom, it hit a TP area. And so, obviously, our ego price went up here. And I wanted to reach up here. And so, bam, stop loss. Got attacked. Sold from here, right? Sold from here. This been entry, stop loss above there, and obviously wanted it to hit this area, but now this one, possible 1-8, partial was taken because this was TP1. This says 1 minute OB. This was TP1, so bam, there's an area of interest where the buyers can have opportunity to push the market back up, and so you see they had a reaction. So TP1 was there, so partials were taken. He did not hit my overall TP, but the remaining volume got taken out at break even. And so, excuse me, right here, got in for a dope buy entry on gold to be able to break above this high. When it broke above this high, it took partials. There's a counter trend buy, obviously. Sellers had opportunity to come back in. Here's the sell, and here's the drop. This right here is NFP. NFP came out at this time, 8:30, and then boom, dropped it all the way down. So you never miss a trade opportunity. You got to understand when the buyers and when the sellers can come into play. Okay, got to understand when the buyers and sellers can come into play. All right. So let's see. With that being said, we're going to simply erase everything that's on gold. Simply erase everything and mark it back up from scratch. All right, because we gotta keep repetition. We gotta keep repetition of building muscle memory on how to draw up our charts and how to mark up our charts. All right. So, boom. Take away all the drawings. Start with the monthly. That's how we always do it. Top down analysis, starting with the monthly. All right. So we know right here, this is a breaker structure, right? This is a breaker structure. Okay. And once you have a bullish breaker structure is the effect. It's the result of something that happened. It's like, okay, what's the result if you completely rupture your patella tendon? What's the result if you completely rupture your Achilles tendon? What's the result if you completely tear your ACL, your PCL, your LCL, your MCL? The result is surgery. Okay, and the result is surgery and rehab. Okay, you have surgery to get it fixed. The cause of it is what happened prior to the tendon completely rupturing. That was the cause. So here's the deal. When it comes to trading, you have the effect of a bullish breaker structure, which is an old high that is broken, and a new high that is formed. Okay? What is the cause? What caused the market to break that old high and go upward? Market price cycle. When you understand, um, as a matter of fact, let me get the book. Let me get the books. When you understand how, when you understand how a market prints, you'll be able to be patient. Okay, and so these three books right here. Number one, part one, Trading and Investing for Beginners by Ruben Villahermosa Chavez. He goes into detail. He is a Wyckoff trader. Shout out and thank God for Richard DeMille Wyckoff for coining the phrase the Wyckoff method and understanding that the market moves and market price cycles, okay, and the psychology behind it. So, yes, absolutely, this stuff is absolutely uh, more than gold, it is diamond. Um, this stuff is absolutely 100% um, golden when you understand it, when you're able to understand it. Like, it is amazing. It is amazing that he went into detail about something. This is book number one, all right? Book number two is the Wyckoff methodology in depth, how to trade the financial markets logically. Doesn't matter what market you're trading, whether it's stocks, forex, forex majors, forex minors, indices, metals, um, crypto. Doesn't matter. Same methods. All right. That's book number two, and then book number three obviously is Wyckoff 2.0. Not the same market, a little more advanced. What he did was take a indicator called the volume profile indicator and stretch it over the market price cycles. Now the market prints like this in order: accumulation, reaccumulation, distribution, redistribution. Okay, the market price cycles. It prints like that in order. Okay, and so it doesn't print out of order. Doesn't matter if it's an uptrend or a downtrend. Okay, so here's the deal. Um, we see how the market came right here. The market reached some type of reaccumulation area, and then it went bullish, right? So right here in this specific area would be a monthly demand zone, right? Monthly demand, okay? And then this right here would be a breaker structure, okay? And it's also liquidity being taken, okay? When the market breaks an old high and creates a new one, this is liquidity being absorbed. It's called buy side liquidity, okay? And so people who have their stop losses right above an old high, so then it gets absorbed, okay? And so what will happen is this. So you can create a template that says, okay, you can do a monthly breaker structure, okay, above, or you can simply do like this and say, hey, take a trend line, create a template, and then you're like, okay, cool, monthly liquidity above was taken, monthly liquidity was taken. Same thing. It's just a bullish breaker structure is the same thing as liquidity above. Bullish breaker structure below is the same thing as liquidity below. A change of character above is the same thing as a bullish change of character is the same thing as saying liquidity above. Bullish change of character below is saying the same thing as liquidity below. All right, once it happens, it has to happen. You know, like liquidity is taken. Okay, so uh, what will happen is it takes liquidity, then it reverses. Okay, it takes liquidity and reverses. So you have a breaker structure right here, monthly breaker structure above. That's what BOS stands for. Create this high. Now the market decides to do what? Redistribute and then accumulate again, causing a bullish change of character right here. So then this created a reaccumulation. You got this accumulation, so you got the distribution, redistribution, accumulation, reaccumulation right here. This whole entire thing is a reaccumulation. Now, guess what? Inside of it, on the lower time frame, you have the same market price cycles. They're just smaller. You had the same accumulation, reaccumulation, distribution, redistribution, right? Printed all over again, but it just made a big, gigantic reaccumulation. You got to understand what time frame you are on, all right? Because every single time frame acts as its own market. That's why you have 4 different types of traders. You got scalpers who don't go higher than a 15-minute. You got intraday traders who don't go no higher than a 1-hour time frame. Then you have swing traders who normally look at the H4 and daily. Then you got position traders who are looking at the weekly and monthly. Okay, and they don't go no lower than daily. Okay, long-term traders. So boom, same candlesticks and everything on the M1 time frame, on the second time frame, same stuff. All right, just gotta understand how a market prints. So cool. Market popped up. This is going to turn out to be entire. It wasn't distribution, probably reaccumulation for the monthly. It turned out to be, it's gonna turn out to be a reaccumulation for the monthly, something like this. But anyway, anyhow, so see right here, market previous high, came back low, tapped into this demand zone right here. Boom. Tapped into the demand zone right here, and it went up to do an accumulate, reaccumulate, break structure right here, right? So now you got a break structure right here. Break structure above. Cool. We see the reaccumulation. We see the accumulation right here, which is imbalanced. So that means the buyers have an opportunity at that area to make the market go back bullish again. Not saying it is, but it's the opportunity. Because you see the bullish engulfing candlestick, you see how it is imbalanced right here. Nothing came back to hit this area. And the market cannot continue to go bullish forever. At some point in time, it's got to create a distribution long term. Okay, but that doesn't prevent us from going in the market on lower time frame to trade for sales. Okay, so let's go to the weekly. We're done with the monthly. Let's go to the weekly. What I see right here, you got this possibly being liquidity. Yes, part of the reaccumulation, but this is possibly liquidity that's probably going to be taken out in the future. Okay, not right now, long term. So cool. Let's go to the weekly. See what it looks like on the weekly. Okay. So market broke up above here. Never came back to this area. We see the imbalance right here on the weekly. All right, there's an imbalance right here on the weekly. You see that candlestick has not been mitigated, so we're going to take it into consideration and say this is a weekly demand zone. It's an area of interest where the buyers can possibly perform a future accumulation. So let's go to the daily. Okay, you see this reaccumulation right here on the daily. Right here. We got this right here. Okay, boom. We got a reaccumulation on the daily right here. Right, so market went up again. Right. Let's see what we're looking at now. Let's look at the H4. All right. H4 we can look at right here now. So I see okay, possible distribution coming into place. I see the elements of a distribution. I see the elements of a distribution. Let's go mark it on the H1. Okay. So what I see is that this is a, let's see, this is a potential preliminary supply. Mark this green since we're on my H1. This is a potential preliminary supply. This is an event in the Wyckoff distribution schematic. All right. Price obviously came down here and respected the demand zone. Okay. So what I see is preliminary supply, buying climax. Oops. Buying climax. This right here being the automatic reaction. This right here being the secondary test. This right here being the minor sign of weakness. And possibly looking for an upthrust. That's the elements that I see. I'm just looking at what I'm seeing. I'm not saying what is. So I see the W in between here. See the W. Market came back down to this area. So now, what are we looking at? Okay, the market decided to break this old low right here and create what? A new low. So that means the bulls have to come into the market, right? Because what causes this old low to be broken? That means the market had to distribute, redistribute, break a low to create break an old low to create a new low. Then the bulls got to come into the market. Okay. So when we look internally in this on the lower time frame inside of here, we can look for a possible setup. Okay. So now you can look at this as you can look at this as a bearish break of structure or liquidity being taken. It doesn't matter. It's the same thing. Okay. This broke structure here, right? And then it reversed. So we're on a 1 hour. So H1 up here, below. We go to the M30. Okay. We go to the M30. What do we have? This low led to what? This high being created. So let's see if I can put that on the H1. I'm gonna just put on the H1. So this low led to this high being created right here. Okay, so now I want to tap into the events in this because this looks like it's going to be the higher low. Okay, so let me tap in on the lower time frame to see what we're looking at. Okay, 30 and 15. Okay, so we got an unmitigated supply zone that the market could probably do what? Sell from. The market can probably sell from. So I can map this out like this. Possible supply zone where the sellers can rejoin the market and push the market back down. Right, so I mark this as an M15 supply zone. Okay, I go to the M5 and I can see internally, you can see internally how the market is bullish on the M5, right? The market created a low, created a high. The sellers did not do what? Push this lower past this old low, respected the demand zone, diverge, change character, broke structure above this high, create a new one internally, which is called substructure. Okay, so you see this redistribution right here, right? You can see how the market created a redistribution right here, right? So the market decided not to sell after the mitigation of that redistribution zone. They decided to do what? Come back down here. And one of my favorite moves now in the market is to look for a buy. I want to see that an old low gets broken into a demand zone for a buy entry. I want to see an old low be swept and broken into a demand zone, which is a powerful move for the buy entry to do what? Go bullish. So you could have definitely taken this buy right here on gold on Friday, right? So look, in one time frame, you had what? The market, the market diverged and changed character. You know this is accumulation. So guess what? You could have mapped this out just like this and said, oh yeah, bet this is an area of interest where the what? The buyers can come in at. And why did the buyers have to come in? Because an old low was swept and a new low was formed. That is why the buyers had to come in. Okay. So that was the fuel and the liquidity that led to the bullish move right here. So remember, the bulls can come into the market on what? An accumulation level, a reaccumulation level, and after the market creates a lower low in a downtrend. So you got this being a what? A high, this being a low, this being a lower high. It breaks structure internally, creates a new low into a demand zone. Okay, that means the liquidity was swept right here because guess what? This is a divergence and change of character as well. This just says, hey, we're going to diverge and change character. This is a retracement. Okay, it's a retracement. Now, in an uptrend, not in an uptrend, the bears can come into the market on a distribution, redistribution, or after a old high is broken and a new high is formed, the bears can come into the market. So all of this right here, all these retracements and everything, this buy, all of this is valid. This is valid. Look, this buy is valid right here. Look at this. It just wasn't long term. So guess what? What do you have? A low right here. Look at this low right here. This low was swept, right? Old low broken, new low formed into a what? Demand zone. And guess what fueled the move? Boom. There's your buy. Market change character, right? This is the area of interest. This right here was a what? A reaccumulation. See the triangle? Okay, that was a reaccumulation. So this was an area of interest where the what? The buyers could have came back in the market, right? You see when the market did what? Created this high, distributed, redistributed, bam, respected it, and did what? Boom, respected and went back bullish. So the market had to do what? Accumulate, reaccumulate, break this old high, form a new one. So guess what? If this is a break of structure, if this is a bullish break of structure, right? This is a bullish break of structure. Who has to come into the market now? Who has to come into the market? The sellers have to come into the market because this is the effect, okay? This is the effect, the result. What internally caused this to happen? This old high to break and a new high to be formed. The market accumulated, reaccumulated, broke an old high, formed a new one. Come on, bears, come in because you got to come in now. Accumulation, reaccumulation, distribution, sale, redistribution, right? Then the market did what? Distributed, redistributed, broke this old low, formed a new low. Okay, the bulls got to come into the market. Makes sense? The bulls got to come into the market now. Right? My 3 people on live with me. What are some pairs? What are some pairs that you want to look up? What are some pairs you want to be marked up? Okay. I just normally always start on gold because gold is my favorite pair, but you can apply these same concepts to any pair at any time frame. So post a comment. What pair do you want to see marked up next? And are you gaining value from what I'm going over? So all of this right here, you could use all of this. Every single candlestick, every single high that's broken, every single low that's broken, everything that is formed is absolutely intentional. Okay? You just got to know when to get out the market. Okay? So here's the deal. right here. This right here is a break of structure. Okay. All of this is a break of structure. You see when the market goes down, refills an imbalance, and then goes back up. Okay, boom, this high was broken, which means the seller's got to come in at some point in time. It's not a matter of if, it's a matter of when. Okay, cool. The market reaccumulated right here, went up, came back, did what? Respected this imbalance right here. So what it's doing is getting everyone to place their buy orders in right here. So this right here is a trend line in between here, right? So trend line in between here is getting everybody to place their buy orders right here. Okay, buyers here, buyers are present here, buyers are present here. Cool. The market respected this imbalance, accumulated, reaccumulated, and then broke this high, right? So now who got to come into the market? The bears got to come into the market. Here are the bears. Bullish breaker structure. Here are the bears. Distribution, redistribution, breaks this low. Now because this low was broken right here, where this trend line is at, this liquidity. Now that this low was broken right here, and remove this. Now that this old low right here was broken, because this is the last low that did what? Respected this demand zone, accumulated, reaccumulated, broke this old high, created a new one. The bears got to come in, distribute, redistribute, broke this old low. Now that this old low has been broken, the bulls got to come into the market. And here their presence right here. That's the old low that was broken. The bulls got to come into the market. Accumulate, reaccumulate, break this old high right here. We on the M1 time frame with it. Break this old high right here, form a new one. Now the bears got to come into the market again, because the bears had an opportunity to sell from this supply zone right here. That was strike one. That was opportunity number one. So they didn't swing and a miss. Bears didn't come in. Okay, opportunity number two, this distribution right here. Okay, swing and a miss. Okay, strike two. Now that the market has broke this old high and formed a new one, it's not a matter of if, it's a matter of when are the bears going to come in. Okay, so you see how the market created this high, then it distributed, redistributed, came back, created this low. So it did what? Tapped in to some type of demand zone, broke this old low, formed a new low. The bulls come in, accumulate, reaccumulate, break this old high, and form a what? New one. Now guess what? A bullish breaker structure had just happened again. Who has to come into the market now? The sellers. Here go to distribution, redistribution, boom. Right here, respected this what? Respected this low, and said what? Okay, maybe the bulls want to push this back up and break this old high. Now here's the deal: the purpose of a higher low, the primary purpose of a higher low in an uptrend is to do what? Break the old high and create a new one. The purpose of a lower high in a downtrend is to do what? Break the old low and create a new low. That's its primary purpose. At times, it's not going to happen because it can't happen forever. So guess what? This person right here, this low right here, his job was to do what? Go up, break this old high, and form a new one. Guess what? The market said, The seller said, came back to what? The redistribution area, which is an area of interest where the sellers can do what? Come and rejoin the market and sell. Because guess what? Isn't this redistribution the same thing right here? It's the same exact thing. It's just that the sellers didn't come in off of the supply zone. But guess what? The market respected this low right here and did not create a new low, pushed it back. The market accumulated, reaccumulated, respected this supply zone right here, and did what? Sold off. So you could have did what? Did a market execution off of this level. You could have did with confirmation, could have did a market execution, close of the candlestick, give you confirmation. Your stop loss could have been right above the supply zone, and you could have did what? Sold this all the way down here, past this what? Now here's the deal. The market now did what? If the market sold from this area, that means the market has to do what? Distribute, redistribute, break this low, and then it did what? Led to the break of this low as well here, right? Then it broke this low. So guess what? Now that it broke a low, who got to come into the market? The market has now not only broke this low, but this low as well. This is the last area where the market did what? Accumulated, reaccumulated, broke a structure, right? So now, since this low was broken, the bulls got to come into the market. Does that make sense? The bulls have to come into the market now. So now the bulls come into the market off of this level, this unmitigated level. Okay, price sweeps a low. Okay, here's the deal. This is how you will read it. This is exactly how you will read this on the M1 time frame. Okay, price smacked this supply zone with this candle. This candle led to what? Break of structure. Okay, market accumulated, reaccumulated, respected this supply zone. Okay, then it did what? Distributed, redistributed, broke this old low, led to new low. Then the market did what? Accumulated, reaccumulated. It did not respect this supply zone, continue to go bullish. So this is now what? A change of character. This is called a change of character right here. Okay? Now, here's the clue. When the market causes a change of character, your anticipation is, oh, the market should come back. The market should come back to this demand zone that caused this bullish change of character and do what? Refill the imbalance and then start to go bullish. Okay, that's your anticipation. Let me give you a clue. Let me give you a vital clue as to why this was a retracement. Now here's the deal. Here's the divergence, right? Price landing lower, price landing upward on the RSI, right? The last known supply zone that did what? Distributed, redistributed, broke this old low, create a new low. This is a supply zone where the sellers can come into the market at. There's a redistribution in here where the sellers could have came to the market at, Boom, strike one, swing and a miss. Boom, strike two. This distribution on swing and a miss. Market calls a bullish change of character. So guess what? Now that there's a bullish change of character, you're anticipating the sellers coming in. You're anticipating the seller's presence. Okay? The market created a bullish change of character. You're not looking for buys after the market created a bullish change of character, because if a bullish change of character happens and it is confirmed that this indeed is a bullish change of character, what causes a bullish change of character internally is an accumulation, reaccumulation that causes a bullish change of character. So when you see a bullish change of character, okay, I'm looking for the sales. I'm not looking for a continuation of buys, because now I just did what? I broke an old high. Does that make sense? So don't get fooled by all of this. Okay? So now here's the deal. The very, very vital reason how you knew this was not changing the trend and it was just a retracement in order for the sellers to come back in and break this old low and create a new low was this. After the market created this bullish change of character, the imbalance did not immediately come back to do what? The market did not do this. Let me draw this path. The market did not immediately do this. Come back to this demand zone to create a higher low to go back up and do what? Break this old high, create a higher high. The market didn't do that. The market did this. This is what the market did. The market did this. Created this low, bullish change of character, and did this. Y'all get what I'm saying? Hey there, Grandma. Hey, girl, you looking finer every day. How you feeling? I've been doing well. How about yourself? She can't hear you. She can't hear. It's okay. Yeah. Absolutely, absolutely wonderful. Absolutely.
And then she do that, baby. And you do that.
You do that. Absolutely, we will.
Girl, we just became accustomed to you cussing us out. I'ma come down there and beat you up. I'ma come down there and beat you up, girl. All right.
He's talking reckless. That's
Oh,
her.
guess what? Faye got an interview.
With Let's go.
They're right here.
Let's go. so, so what happened was the market decided to do this. The market decided that it did not want to come back to retest this demand zone right here, right? So the market just said, you want to know what? We're going to leave this imbalance. We're going to leave this imbalance in the market. We don't want to go bullish. We don't want to go bullish. So the market said low, created this reaccumulation right here, continue to go bullish, right? Came back, respected this demand zone. So now what it's doing is setting up everybody to place these buy orders in the market. It's setting up everybody to think that, hey, we're going for buys, we're going for buys, we're going bullish, we're going bullish. Nope. After this old high is broken, because the market did what? The market respected this demand zone right here. So the market did what? Respected this reaccumulation zone. It accumulated, reaccumulated, and did what? Broke this old high, created new one. Here come the sellers. They got to come in. Right here was an area of interest where the sellers could have came in at. That's their redistribution. Strike one. Boom. This distribution high right here. Strike two. The market decided to break up above it. Now it's 3 balls and 2 strikes. Full count when it comes to baseball. The batter got to swing, which means the Bears got to come into the market. Here's the sale. Boom. Okay. So this reaccumulation, area of interest where the buyers could have came in at. This accumulation level, area of interest where the buyers could have came in at, right? Okay. Now, you know the market wasn't going to come here because once it's mitigated, it's mitigated. Okay. Wasn't going to stop right here. So this right here, you see how this candlestick with this one. So you had real strong opportunity if the buyers didn't want to come in here. Okay. So now the area of interest is okay, where is going to be if I took a sell right here, what would be my TP1? My TP1, once you've seen this obliterated like that, this would have been the TP1. Okay. Or remember I said, hey, this imbalance was an imbalance for a reason and it did not get mitigated right away to go bullish to create it didn't create a higher low. After it created a bullish change of character, the market did not worry about it wasn't concerned about creating a higher low. It just continued to form a reaccumulation and form this. It's got to do this. Here's the deal. In order for the sellers to come in to be able to sell, they have to have people press the buy button. They cannot sell from a price if nobody is willing to buy it from that price, and vice versa. You cannot buy something that's not on sale, that's not for sale. So if nobody is willing to sell from that price, then can't nobody buy it from that price. Nobody can buy it from that price if nobody is willing to sell at that price. Okay, which means a sell order and a buy order in the market. So they have to make this market look like it was going bullish. Man, we gotta get people, we gotta get the ill and uninformed traders to press the buy button. So they were pressing the buy button, they were getting people to press the buy button, and then bam, yanked them. Stop losses hit. Okay? Stop losses hit. So sellers came in and boom. Now here's the deal. You could have used this as TP1, but me being experienced, I knew the market was going to go past this because the market diverged, it changed character, And once it didn't come back to form a higher low, the market is not wanting to go bullish. It left that imbalance open for a reason because it's going to break that old low and form a new low. Okay, and that's what happened. The market distributed, redistributed, broke the old low, formed a new low. So guess what? Who has to come into the market now? Now that this old low has been broken, who has to come into the market now? The bulls do. So the bulls come in off of this what? This imbalance. Here come the bulls. Here's the accumulation. Bam. This redistribution is what? TP1 is the first area of interest that the what? The first area of interest that the sellers had an opportunity to do what? Sell the market back down. Okay? They didn't come in. The market did what? Reaccumulated. You see the bullish triangle right in between here. The market reaccumulated, right? Okay, so accumulation, reaccumulation, boom. This was the next area of interest, this distribution. You see it's unmitigated. This is the next area of interest where the what? The sellers could have came in. Boom, it got obliterated. So guess what? This could be a big, gigantic divergence and the market doing what? Changing character. But it's not. Okay, so this old low got swept, liquidity taken, boom, formed a new low into a demand zone. So the market now does what? Now you got to look at it from a high. You got to look at it from a bigger perspective. This is a low. This is a high. This is a higher low, and the market went up and did what? Accumulated, reaccumulated, broke this old high and formed a what? Another high. Does that make sense? Let me know in the comment section. Let me know in the comment section. Does that make sense? Because I don't know who's watching, but the thing about it is this: if you're not the person that's watching, that's on live with me right now, if you're not an individual that's it doesn't matter, beginner, intermediate, advanced trader, um, you're an individual that's looking for mentorship. I have a free Telegram right here. I have a free Telegram where I have a free Telegram. I want to show you the Telegram if you're not a part of the community. Let me see. See how I pull up my Telegram chat. So I have a free Telegram. All right, let's see. I don't know if you can see this right here or not, but I have a free Telegram with signals. I have the Telegram chat has, to this date, over 85 members. It's free. It has 87 members right now. And I have a YouTube channel. Obviously, you know that because I'm on YouTube now. My YouTube channel has over 108 subscribers. I mean, has 108 subscribers, has over 100 subscribers. Okay. So now, what I'm looking for is this. Why did the market sell from here? Why did the market sell from here? Because you had a 5-minute redistribution. You had an M5 redistribution. So guess what? The market sold from here because of this what? This what? Imbalance right here. Makes sense? So, but this was supposed to be a what? A supposed lower high, right? This lower high did not do what? Lead to a new low. Makes sense? That lower high did not lead to a new low. So now internally you got a what? A low, a high, higher low, confirmed, breaker structure, higher high. Now your thing is, okay, you're not looking for buys now because you have a what? You have a high that was broken. Now on the M5 time frame, you're what? You're bullish. Low, high, higher low, breaker structure, high, high. You're bullish. Okay? So now you're thinking, okay, not a matter if, when are the sellers going to come back into the market? When are the sellers going to come back into the market? You see, I'm gonna tell you this. You see how? Let's see. Let's see if it's really ugly. So you know this is an accumulation. This turned out to be a reaccumulation, right? You see the triangle in between here. So you have this low that led to what? This high. Then you got the market doing what? This would be the higher low right here. Now this low's purpose right here. This low right here, its purpose is to do what? Break structure up above here and create a new high. That's its purpose. That's what it's supposed to do. But at times, a low in an uptrend, a low that's made in the market, at times is not going to break up and create a new high. So guess what? It's not a matter of if, it's a matter of when do the sellers come into the market. Does this low is this low gonna lead to what? The break of this old high and create a new one? We don't know. But all we know is this. Internally on the M5 time frame, we have the market creating a low, we got the market creating a high. This lower high right here was supposed to break this old low and create a new low, but it didn't. So you got a low, high, higher low, break a structure, higher high. So now, guess what? Now you're thinking, okay, yeah, well, when the bears gonna come in? Okay, when the bears gonna come in? Okay, I see, areas of interest. I see possible opportunities, but I don't know when. I just know how market prints. So I'm prepared. I'm prepared. Okay, doesn't matter. M1 time frame, same stuff, same exact stuff. So here's the deal. We're gonna go look at Bitcoin. Since Bitcoin, I trade crypto on the weekends. We're gonna go look at Bitcoin. I think I deleted everything as far as marking up. No. So what I want to do is delete it from scratch. Same thing here. Price diverged, changed character. In order for the market to break this low, what must have happened? The market had to distribute, redistribute, break this old low, create a new low. So then if an old low has been broken and a new low has been formed, the bulls have to come into the market. It's not a matter of if, it's a matter of when. Okay? So guess what? Why was this old high broken right here? Right here, why was this old high broken? What caused it? This is the effect. Okay? What caused it? Remember, cause and effect back in grade school, back in English, cause and effect. What was the cause of this old high being broken and a new high being formed? The market had to do what? Accumulate, reaccumulate. You see the triangle in between there? Break an old high, form a new one. Now the bears got to come into the market. Distribute, redistribute in here, and then bam, did what? Accumulated off of this level, but it wasn't long term. Accumulated, reaccumulated, smacked to some type of demand zone, supply zone, distribution, redistribution, breaks this low, breaks this old low, and did what? Now the bulls got to come in. And then you see the divergence, you see the change of character. That makes sense. Um, this individual, for people that came on the live, and like I said, you're not part of the Telegram, what you need to do is go to my most recent YouTube live session video on my channel. Look in the description below. There's going to be 2 Telegram links. You're going to have a trading community and a trade and signals chat. You just simply add yourself to the chat. And what I do, I have a weekly schedule that I put out every Saturday or Sunday, and everybody knows when I'm going to go live on Zoom. I do 5 to 6. I do 5 to 6 lives a week of recorded Zoom sessions, and we're trading live. Okay, so everybody can understand and explain, because I realize everybody can't come live. You want to ask your questions or anything like that, that'd be your time. or you can ask them in the chat. So here's the deal. This right here is a breaker structure. Okay, it's a breaker structure, right? Same thing as buy side liquidity being taken. Right. So now I want to go into the lower time frame. Now, what caused this old high to be broken and a new one to be formed? Look at it. Divergence, change of character. Right. Look at it. Slanting lower. And this is roughly going to be slanting either equal. It's going to be equal lows, or it's going to be It's going to be if it's this slanting lower. Sometimes it'll be equal lows. It'll be hidden divergence. Okay. You can see it better on the weekly. Look at it. So slanting lower. See how it's slanting upward on the weekly? Like this. See? So I don't use the indicator. I'm just showing you all how you can utilize it as far as it helping you out in your trading. You can develop that trader's eye. So right here is a reaccumulation. Obviously, this is an area of interest where the buyers, future buyers, can potentially come into the market. Okay. So this is a reaccumulation area. All right. So this is a low break structure. This is high. This is the high for right now. Okay. So now let's go to the weekly. Let's tap into that because we don't have to sit up here and wait for that to construct. Okay. So what you got, what you can see right here is what the market creating supply zones. You see the market distributing, redistributing, form a low, accumulate, reaccumulate back into a supply zone, distribute, redistribute, break this old low, create a new low, right? Accumulate, reaccumulate back into a supply zone, distribute, redistribute, break the old low, form a new low, accumulate, reaccumulate back into a supply zone, or just getting people, the sellers to come in early, distribute, redistribute. Now guess what? We distributed and redistributed right here, but it did not do what? Form a new low, respected a demand zone. The market then did what? Accumulated, reaccumulated, broke this old high, which means now it did what? Swept this liquidity up here, buy side liquidity going into a supply zone. Now the market is doing what? Attempting to distribute. That's how you read the market. I'm telling you, if you respect the market and its conditions, you won't be caught become someone's liquidity. Okay. So now on the weekly, we can mark up highs and lows like this as far as market structure. Okay, like this. This is a high. Okay. You can say this is a low. Then this will be the high. Then what? Broke low, create a new low. This is the high. And did what? Broke it old low, create a new low. This was a high right here. Right? So this was a high. Came back. This did not break the new low. So now we're doing on a daily time frame, we're what? We're bullish on the daily, right? When you put this on the higher time frame, you swap to a lower time frame, it moves the highlighted points. Just like it does that. It is what it is. So now look, internally, we're what? We're bullish. So now what? Low, high. You see the supply zone that is smacked. When the market smacked this supply zone right here, it was supposed to do what? Go down and create a what? Break this old low, create a new low. It didn't. So it distributed, redistributed, came back, tapped into the demand zone. Then it led to what? Accumulation, reaccumulation, breaks the old high, creates a new one. Make sense? Cool. So now you're looking at this internally like, okay, cool, bet. Okay, this is a breaker structure right here. Breaker structure. I'm gonna put on a daily breaker structure above. I know this right here is a reaccumulation. This is the area, look, where the market last respected. this area and did what? Accumulated, reaccumulated, broke this high, right? So now what I'm gonna do is this. I'm gonna place me a demand zone right here because this is an area of interest where the what? The buyers can come back and participate in the market. You can tell that more than likely this low right here, this accumulation that the market has created, maybe on a lower time frame, it's an imbalance. The market did a bullish divergence, change of character, and it hasn't came back to do what? Respect that demands on the cause of change of character. Do what? Go back and break that old high and create a new one internally. So right here, I'm thinking long term, the market's going to distribute, redistribute, sweep this low, create a new low, and then we'll get what? Buyers coming back in to push this back up. Remember, the powerful thing about the buy and about the sell, for the buy, you want a old low being broken. Let's just say the market does this. This is the low. You want this old low to be broken into a demand zone. Liquidity swept. You want this to be the fuel. Old low being broken into a demand zone to then what? Fuel the buy move to the upside. Does that make sense? So for a sell, you want to have what? An old high right here being broken and swept into a what? Supply zone to be able to do what? Fuel the move to the downside. It's a powerful, powerful trading move. It's very powerful. Very, very powerful. Right? Any questions, problems, or concerns? Because we're about to see if we can catch the trade on Bitcoin. All right. So this is an area of interest. Okay. So let's go to the H4. That doesn't stop us from taking trades while it's cooking. Okay. That doesn't prevent us from taking trades while it's cooking. So bam, this low was swept. The market started going bullish. Okay. So what I need to do is, okay, this low was swept like this. All right. So we're on the 4 hour. You see the 4 hour liquidity below was swept. Right. And so now H1, see, like this is a bullish divergence, and the market has done what? It has changed character right here. The market has changed character. So now what? The sellers got to come in at some point in time. Now, what is their purpose? You don't know their purpose, but they got to come in at some point in time. Because in order for the market to have a bullish change of character, the market has to do what? Accumulate, reaccumulate in order to do it. So now, let's see what we're looking at. Let's see what's up. Oh yeah, we did it. All right. So now what you want to do is be careful. Okay, you can map up your structure. Okay, the market created this low. You're on the H1. Market created this low. You had the market create a high. You had the market create this low right here. The market went up and did what? Created this high. The market came back and did what? Created this low. So now this has been mitigated. You can draw your box, right? The market came back to pick up this low and mitigated it. All right. So this is gone. This area is gone. Now the market did what? Accumulated, reaccumulated, broke this high, created a new one. Okay. Got this being a high. The market tapped into a low right here, right? This low did not do what? This low right here did not do its job and do what? Perform a new high, right? It did not do its job, break above the old high, perform a new one. So guess what? Now we're doing what? Low. The market, you can see the divergence. There's a what? Lower high. Respect to what? A supply zone right here, right? Let's see, 1 hour supply zone, right? And now it did what? It hasn't created a new low yet. You can see how the market has not, this high right here, did not do its job and create a new low yet. So now what? We're battling. There's a battle going on. There's an absolute battle going on. This is how you trade. Now, guess what? This is a what? A redistribution right here. So this is an area of interest where the sellers can come into the market. So that's why you're having this selling pressure right here from the supply zone. In order for the market to go bullish like this from up here, the market has to do what? Accumulate. So let's look inside of here. Okay, let's look inside of here. So also what I want to go over is this. Why did the market sell from here? Right? Look at this. The market did what? Went up, created this high, created this low. Broke this high, sellers came in, respected that low. Broke a high again, broke a high into a supply zone, took the buy side liquidity into a supply zone, and then sold off. Right? So now let's look at this and see what this is going on here, because now we have a supply zone right here that was broken. We don't know if the sellers want to come in or if the bulls are going to reaccumulate to push up a little bit higher. So let's look into the details. We can look into the details, okay? So now what do we have on the M30? We have a low, okay? We have a high being formed right here. We have a low being formed right here. And the market doing what? Breaking above this high, forming a new one, okay? So now what do we have right here? We have a what? Demand zone right here where the buyers can do what? Come into the market off this M30 zone. Okay, and we want to do what? Let's tap into a lower time frame. Boom. Okay. So now we're tapping into a lower time frame. We have to see where it's at on other time frames. Okay. So what I see is okay. Buyers attempted to come in off of here on the M5 right here. So you have this high. I'm gonna turn this orange. You have the market come low right here, respect the supply zone right here, created a high, broke the structure low, created a new low. So now you're looking for who to come in? The buyers. So we go to the M1 time frame, right? Now we know that we're what? We're bearish on the M5 time frame because we had a high, low, lower high, market respect supply zone. Did what? Distribute, redistribute, broke a low, create a new low. Buyers diverge, change character, come back into the market, right? So now you're looking for what? You're looking for another opportunity to probably sell. You're looking for another opportunity to probably sell. So I don't know how high the market's going to push up. But to be honest with you, I wouldn't want to sell from where the price is currently at because then my stop loss will have to be way up here. That's just my preference. Okay. So I would be patient and see, okay, I see that right here, the buyers attempted to do what? On the M1 time frame. So we had this high being created. Okay. We had this low being created, right? This low right here. We're attempting to see if this low wants to do what? Break structure and lead to a new high. Okay. Or if it doesn't, the sellers will come in, prevent it from breaking the high, and break this low, and then you can do a scalp sale. Okay. Y'all give me one moment, please. One moment. So, like I said, you see how the bears are wanting to come in. You see how the bears, this was an engulfing candlestick, so this is an area of interest where the buyers could reappear. The buyers did reappear, that they didn't have enough juice to do what? Accumulate, reaccumulate, break above this high, and create a new one. So then the sellers came in and what? Distributed, redistributed, broke this low, and attempted to create a new low, right? And so the fact is that because this is unmitigated, my thing is that this sell is going to probably break this old low and create a new one. That's my anticipation. That's my anticipated move that I believe the market is going to create on Bitcoin. All right, because it left this unmitigated, this divergence, change of character. Price did a reaccumulation and went up and created a high. So guess what? I'm looking. Oh, I can go sell right now. I'm about to sell Bitcoin right now. Uh, going to sell market execution right now because it just smacked a what? A distribution supply zone, distribution supply zone. I'm putting my stop loss right above this high right here, which is 62.038.02. That's what I'm going to do. 62.038. Let's say 62.038. 62.038.31. Oh, it may push. It may push through now. Yeah, it's gonna push through. It's gonna push through now and create a new high. So yeah, let me get out of this trade. I ain't even have enough time to put the stop loss in, but I'm gonna close it. Well, you know what? Let me see if it's just grabbing liquidity. Let me see where this candlestick ends, and then it may just wicking out right here. Let's see, 62, because the market created a low, created a new high. So the bears do have an opportunity to come in. I'm gonna just put my stop loss at 62.054.16. 62.054.16. 62.054.16. So between sway charts and trading view, they have different prices. So this area is mitigated. There's no void. So I'm looking at the sellers probably smacking right here, want to come into the market, and looking at it probably selling off. It's not a matter of if, it's not a when because they broke this old high. So now this is the new low right here. So the sellers came in, pushed up. The sellers came in, smacked this demand zone, respected that demand zone. Yeah, irrespective of the demand zone. Okay, see? Now you can see my stop loss. I put my stop loss up here, right? But sway charts has a different price. They're off a little bit. So stop loss got hit on that particular trade because my stop loss is way up here. And you see that the candlestick never jumped up there. But because sway chart has a different price um, of where it's at, and probably because of the spread. But now right here is not a matter of if, it's a matter of when and how are the sellers going to appear because this high has been broken. So now this turns out to be an accumulation. This turns out to be a reaccumulation. Now you're looking for your distribution. Okay, you do not have to go on the M1 time frame if you don't want to. I'm just showing you how fractal, super fractal the market is. And I'm expecting sales. I'm absolutely expecting sales from this level eventually. So I'm going to keep an eye on it. I'm going to log out. This is a re-accumulation right here. I'm going to log out, and I'm going to keep an eye on it and see if I can potentially get a trade out of it this evening. With confirmation, I take confirmation of these trades. So this low right here could lead to the break of this high. That's absolutely true. So I don't know when the sellers are going to show up. They have to show up, but I don't know. So that's why you need to KYC, know your candles. So KYC, know your candles. Right, but I appreciate each and every one of you for taking time out of your busy schedule Don't listen to what I have to say. It's always greatly appreciated. I will never ever take it for granted. Have a safe, blessed, productive rest of your super Saturday and weekend. Know that I love you, and as I always like to say, God created us on purpose to fulfill a purpose. So, what purpose are you willing to fulfill? And don't be one of many. Be the one. You all take care, and I love you all to life. You simply want to become part of the Telegram group. Go to my most recent YouTube live session video. Look in the description. Click on the trade community. Click on the trading signals. I do 5 to 6 live recorded Zoom calls a week where we taking the same exact trades. Okay, and I put the video after it's finished converting. I put the video in the chat for people who were in attendance and people who were unable to attend live. All right, Zoom call. So love y'all life. Y'all take care, and I'm gonna keep my eyes on Bitcoin and see if I'm able to take another trade. Right? Y'all take care.